Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 22nd. We got a lot of data to go over today, as today's like the only day with really any data. We had I think on Monday one item, and tomorrow we got yesterday I think we had one item, and tomorrow we got two items. But today it's gonna be pretty packed, so we're gonna jump right into it here, so we won't take up too much of your time today. Today we'll start off with the weekly jobs. We had 254,000, people applied for unemployment last week. Forecast for this week was 258,000. We had more than we expected, 275,000 people applying for unemployment. So that's kind of a surprise, especially with the holidays and Christmas coming up so much. So maybe retailers weren't doing as well, and they let people go sooner or something. Hard to say. GDP, we had the gross domestic product. This is the final revision of Q3. So the final one, as you can see, it looked pretty good. We had the previous reporting came in at 3.2 back last month, and forecast is supposed to go up a little bit for the final revision, and it did go up. Instead of 3.3, it jumped up to 3.5%. So very good numbers right here, especially when we had a 1.4, I think, for Q2, and then 0.8% in Q1. So Q3 kind of really stepped up a bit. It'll be kind of interesting to see what Q4 comes in. So next month we'll get our first taste of what the Q4, our initial one, will be coming in at. See what that comes up. Durable goods orders, we had 4.8% back in October. Forecast is supposed to go the opposite, basically 180 to negative, pull back to 4.8%, and it fell 4.6%. So almost to what the expectations were, our forecasts here. Now, if you take up the big ticket items like airplanes and stuff like that, we got the core capital equipment orders here. And here it was not too bad. October was 0.2%, and November went up to 0.9%. So core capital equipment orders actually was a pretty decent number, because you're taking out the big ticket items, these airplanes and stuff, can really offset the numbers here. And this is really what we want to look at here. Personal income, that's a bit disappointing. We had a 0.5% increase for the month of October. November, we expected to go up to 0.3, and it came in at nil, so no change in personal income for the month of November. However, we got the opposite spectrum. We got the consumer spending for the month of November. So in October, people are spending went up to 0.4%. For November, it went up 0.3, or forecast supposed to come up 0.3. It came in at 0.2%. So people did spend a little bit more in November, especially since they weren't making more money. But of course, we got the holidays, so of course, people are typically going to be spending here. Now, core inflation, this is the personal consumption expenditure. When you take out the food and energy, we get the core inflation. This is the Fed's favorite gauge for inflation numbers here. And as you can see, it's pretty low. Even that's been the concern. We had a 0.1% back in October. Forecast is supposed to go up another 0.1% in November, and it came at 0. So we went from a 0.1 or 1.8 year over year down to 1.6% year over year. So instead of going upwards to 2%, what we're hoping for, and that's what the Fed likes, we went backwards a little bit down to 1.6% as a result of that. So definitely want to keep an eye on it. The bond market, as you've been seeing if you've been watching these videos, has been under attack, because they're kind of forecasting when Trump takes over that all the deregulation to tax cuts and everything else is going to create higher inflation, and that's kind of enemy to bonds. Whereas right now, we just saw it drop a little bit here down to 1.6%. So it'll be interesting to see how the investors kind of digest that and see where they go forward with this. So probably it might take a little while for them to digest, especially next month he'll be coming into office and seeing any implementation or how that's going to all unfold, so to speak. Last but not least, we got the leading indicators. We had a October 0.1% increase, so November basically slowed up a bit. So leading indicators can be kind of important in the sense that we want to kind of give us a foresight into the future as to where the economy is moving, and obviously it looks like it's slowing down according to the month of November here. So we want to hopefully see that tick upwards a little bit, but we'll kind of, I guess maybe next month we'll kind of see that number here. Stock market is still kind of taking its cue. It's like what we did yesterday. It's kind of taking a little bit of breather. It's kind of repositioning itself to the investors out there. It is late trading, as we've been kind of saying this week. A lot of the big hedge fund guys already went on their vacation. But we got some of the smaller guys that are kind of repositioning themselves, kind of reevaluating that, especially with the stock market jumping as much as it did in such a short amount of period, to kind of make sure that they're not overreaching themselves. And you're going to see some repositioning a little bit here these coming days. And again, light trades here. So let's go and take a look at the bond market. Here's the bond market where we did close upwards, which is nice. We're starting to get a little bit of a trend here. Even today, we started higher. We didn't stop below where we left off, but now we're up about, basically it's that same pricing as where we left off yesterday, and we're touching about the 10-day moving average. This will be important because every time, if you see here, every time we kind of touch the 10-day moving average, we've been kind of pushed back downwards. So we'll kind of see if we can break above the 10-day moving average, go on the flip side of 10-day average. Moving average. If we can get on here at least for a couple of days here on the other side, we might get a nice little rally and kind of spark a little bit of a rally and bring us back upwards a little bit to see better pricing here. So this will be important. But right now, we've been starting to get kind of a better bullish run here. As you can see, we're not getting the pullbacks that we had for previously. Like when we got upwards, we pulled back, got upwards, pulled back. Here, these are pretty solid here. So these are kind of a good sign here that we could get a little bit of a run here, hopefully, and move upwards here. So stay tuned here. I would stay very cautious here. I would float if you got any interest rates out there, float, but be very cautious as going forward here, as these are pretty solid path going upwards here. All right, folks. So if you guys want to get more updates throughout the day, you can come over to Twitter. You can be found at Mike Bjork. You can follow me there. I do give updates throughout the day, including the market close. And hope you guys enjoy your day. Tomorrow, this 23rd, bond market will be closing early tomorrow, and then, of course, Monday, the markets will be closed. So we'll see you tomorrow morning, and then the following that will be Tuesday. Have a wonderful day. Thanks so much for watching. We'll see you tomorrow. Bye-bye.